The Construction Market Guide is designed to provide timely information to construction executives to help them attract, train, and retain the most highly skilled workforce possible, to understand input costs and the direction of those material prices so they can bid as competitively as possible, and to understand the broader economic environment so they can forecast and make solid decisions for their firm.
Here in October, we see continued economic recovery after a huge spike in the unemployment rate due to COVID shutdowns, with construction unemployment topping 16%. We're back down to about a 7.1% unemployment rate in construction and falling. Construction sentiment, we see some mixed signals here as we look at the number of months of backlog that companies have in construction. We've seen a smaller backlog since a year ago pre-COVID, but backlogs are starting to increase again as we see some improvement. And the confidence index in construction deteriorated from a year ago, but is improving. Also, profit margins. We're seeing more pressure and more expected pressure on profit margins, and less people expecting to hire a lot of new employees. People kind of taking a wait and see attitude here, not necessarily laying off a lot of people, although some are, but more so taking a wait and see to see how things recover. The Architectural Billing Index is a good way to look ahead in construction and see what projects are being planned now. We saw a big drop off in project planning here with the COVID contraction, and now we're seeing things moving in the right direction. Still not at pre-COVID levels, but headed in the right direction. Oil prices have come off significantly, about 26% over the last year, and are stabilizing now as we see demand increase. Asphalt paving mixes, iron and steel, down a bit. Lumber is the big outlier, huge increase in lumber costs, a lot of shortages in lumber. We see a lot of activity on the residential construction side, booming really there, and we see that reflected too in new housing starts, which have jumped back up really to pre-COVID levels and even above, as we see extremely low interest rates, giving people opportunities to buy homes at low prices, and also opportunities for commercial construction projects to move forward at very low interest rates, making it attractive, although the uncertainty in the environment is giving pause to a lot of projects. Stock prices have recovered from pre-COVID levels. However, we don't see that the same in real estate. Real estate prices are down about 12% over the last 12 months, so it'll take some time to see a recovery there. If you'd like to review your investment portfolio, now's a great time to do that. Also a good time to review your retirement plan. Feel free to reach out to us. We'd love to chat. Thanks.